Hello, this is Money Studio. Gold prices are soaring again, but history warns us every rocket has gravity. What does this mean? In 1980, gold crashed 68% after reaching record highs, destroying fortunes overnight. Now in 2025, gold is repeating the same headlines, the same fear, and maybe the same trap. Main content. The world is obsessed with gold again. Turn on the news, open social media, it's all gold to $3,000. The ultimate safe haven. Buy before it's too late. But if you look closer, this excitement feels eerily familiar. Because this same pattern happened before in 1980, and it ended with one of the biggest crashes in financial history. Let's rewind. In 1979, the world was shaken by three massive crises: an oil shock, a war, and a hostage disaster. Each one pushed investors deeper into fear and straight into gold. First came the oil crisis. When Iran's revolution cut global oil production, prices exploded from $3 to $34 per barrel. Inflation surged, costs skyrocketed, and people ran toward safe assets like gold. Fear was fuel, and gold prices climbed higher and higher. Then came the Soviet invasion of Afghanistan. The world braced for another world war. Headlines screamed war clouds over Asia. Investors rushed again to buy gold, believing it was the only safe place for their money. And as if that wasn't enough, Iranian militants captured 53 Americans in Tehran. It was global chaos. Every week, newspapers warned that war between the U.S. and Iran was imminent. Three crises, one after another: oil, war, and panic. The perfect storm for gold mania. By January 1980, gold hit an all-time high $850 per ounce, which would be over $1,200 per 10 grams in today's money. Markets went insane. People lined up at jewelry stores across the world, pouring their life savings into gold. Experts said it's going to $2,000, maybe $3,000. Sound familiar? Then came the shock. The U.S. economy was burning with inflation over 13%. The Federal Reserve decided to crush it. Under Chairman Paul Volcker, the Fed raised interest rates from 11% to 20%. That single move, the Volcker shock, flipped the market overnight. When banks started paying 20% interest, gold suddenly looked useless. Why hold an asset that earns nothing when you can earn 20% in cash? Investors dumped their gold. The price collapsed below $600 by the end of the year. A full-blown gold crash had begun. Within months, gold investors lost fortunes. Dealers went bankrupt. And from 1980 to 2001, gold entered a 20-year bear market, falling 68% in value. The lesson? No market goes up forever, not even gold. So what does this mean for us in 2025? Once again, gold is at record highs. Once again, fear dominates the headlines: war in Eastern Europe, inflation worries, and debt concerns. And once again, everyone believes gold can't fall. But history whispers otherwise. Because every time the world believes something can't crash, it usually does. Here are the 5 timeless lessons from the 1980 gold crash that still apply today. Lesson 1. You can't time the market. Nobody can predict the exact top. Not analysts, not influencers, not anyone. When everyone agrees, the risk is already priced in. Lesson 2. Diversify. Putting all your savings into one shiny metal is never smart. Real wealth survives through balanced stocks, bonds, gold, and cash. All play their part. Lesson 3. Central banks can change the game overnight. A single policy decision like the Volcker shock can erase years of gains in days. Lesson 4. Geopolitical fear creates bubbles. Wars and crises cause short-term panic buying. But when the dust settles, prices fall back to reality. Lesson 5. What goes up must come down. No rally is permanent. And the higher it climbs without support, the harder it falls. So is gold about to crash again? Maybe. Maybe not. But history shows us one thing clearly. When greed replaces logic, risk always wins. If you're thinking about buying gold today, don't act on emotion. Study history, diversify, and remember, the biggest losses come from believing this time is different, because it rarely is. This is Money Studio, where we explain how money and technology shape your future. If you found this story helpful, make sure to subscribe, like, and turn on the bell, so you never miss the next financial insight that could change your perspective.